Hi everybody, welcome back to Ox Talks. It is Sunday, December 3rd, 2023. I hope the sound quality is going to be okay. I left the microphone and some of the other little gadgets at the office. I meant to bring them home over the weekend to shoot this video, and I dropped the ball. So hopefully you all can hear me clearly enough. Appreciate all of you. Number one, appreciate you coming over to the channel and subscribing. Jeremiah Babe and I did a show yesterday, and he had asked some of his subscribers to come over and check out some of my videos and check out the channel. For those of you that did that, I hope you enjoyed the content and appreciate you being here. It means a lot. Please subscribe, please like the videos, please share these with family and friends. You know, there comes a point where we can only wake so many people up, and you need to focus on the ones, obviously, initially that are reticent to see what's happening, but those that continue to push back, whether they're family, whether they're friends, co-workers, colleagues. At some point in time, you've got to expend the energy on the people that at least want to have an open mind. The old saying, you can lead a horse to water, but you can't make it drink, is one of, I think it's very applicable with regard to this stuff, with regard to preparedness, with regard to wanting to understand, what the real news is as opposed to the fake news and the cheerleaders out there. So, you know who those people are. And so I would just say, as we start to continue down, as we continue on this path of collapse, I'll get to this in a minute, you're going to have to, from my opinion, hone in on those that are like-minded. And then we form that community and we build off of that platform. You can't save everybody. I know this is an inclusive channel. I'm just saying, you've got to make that decision. I've had to do that also, and there's certain people in my life, I just understand that they're not going to be there. And whatever those consequences are, I think they're going to be very dire. They're going to pay the consequence. And when they show up at my front door, or people in my circle's front door asking for supplies, asking for security, asking for resources, you know what? The answer is going to be no. So keep that in mind. I hope that that is not too harsh the way it comes off, but it is reality. Look, Jeremiah and I were down yesterday. If you saw his video, Jeremiah Babe, we were down at Porsche at a Cars and Coffee for a toy drive event that I was invited to. The reality is this: I don't want you guys, if you saw that video, to get the wrong impression that, this is not what's happening in the underlying economy. That's a very select group. Obviously, I've got some friends, some clients, some colleagues that run in that circle, so it's fun to be there. But we all have to espouse to the formula right now, and I truly believe this deep down, that we are not only in a recession right now, but we are likely going into a depression next year and into 2025. It's not economic advice, it's not financial advice, it's not legal advice, but that is my opinion. We are in a collapse right now. And I would urge you all not to buy into the smoke and mirrors BS that's being shoveled your way each and every day on the mainstream media. I would urge you not to get caught up in this stock market euphoria that is prevalent right now, because the markets believe that the Fed is going to start lowering rates. There's no indication that's going to happen. But even if it does happen, there are going to be severe consequences on the flip side to that move if it starts to unfold in that manner. There's no doubt the crypto markets, and I'll address crypto in this video. I got a couple comments asking for that, but there's no doubt the crypto markets, the gold markets, the stock markets, they're all marching higher on the hopium that the Fed is done raising and not only going to not pause, but also start reversing and lowering interest rates. We will see how this unfolds, but that's definitely what's driving these markets. Look, I saw an article today. I wasn't going to address it in detail, but China is failing. China's consumer defaults are off the charts. They don't have a standard bankruptcy type system that we have here in the United States. Their government deals with defaults in a different way as to consumers. But the point is they are collapsing. Germany's collapsing. We know that as well. So Europe has major issues, and it's all going to find its way here. Look, it's already here. We know that our consumers are in the worst shape they've ever been in. Auto loan defaults, I'm going to address an article in a few minutes, are at their highest level ever. Student loan debt. Look at this is unfolding really, really badly. So, you see JB and I down at a Cars and Coffee, and we're joking around. This is serious, and I hope that you guys can understand that everyone's still got to find joy, find some things they enjoy to do, some happiness. We enjoy seeing the cars. Is that our lifestyle? No. Is that reality for the day-to-day person, man and woman, and family in Main Street? Absolutely not, and I recognize that. So I hope that you will allow me to continue as we step into this collapse to share with you not only my experiences over the last 29, 30 years of owning my own business, but also help you and walk you through as things unfold into next year and the year thereafter. That's why I started this channel. I hope to deliver that to you guys each and every day. So let's talk about an article off of Yahoo Finance from a couple days ago. It says it's about auto delinquency rates. We've talked about this before, but this is updated information, and it's not good, folks. It's bad, bad, bad. It says the last time this many drivers were delinquent on their auto loans was when the first mobile flip phone entered the market, October 1996. That's according to new data from Fitch Ratings examining the percentage of borrowers at least 60 days past due on their loans in 2023's third quarter. This is according to Experian. Borrowers with a FICO score between 501 and 600 fell under the subprime category. Lenders see subprime borrowers as greater financial risk. We've discussed the importance of keeping your credit score as high as possible. It says their low scores often indicate past problems with repaying debt. To offset the risk, the lenders charge these borrowers higher interest rates. Says, but subprime borrowers with their extra high interest rates face the brunt of increased expenses. The article goes on to say, the result has been a dramatic increase in the percentage of subprime borrowers falling at least 60 days past due on their auto loans. In January 2023, 5.93%, it says, of subprime borrowers were delinquent compared to only 0.28% for prime borrowers. This is in September, especially those resigned to higher rates due to poor credit. As subprime borrowers struggled to make the payments, many faced delinquency. And unfortunately, these are the same folks that are out there trying to acquire trucks and automobiles that they really can't afford and shouldn't be trying to afford. Doesn't mean they can't get the car, drive it off the lot. There's always a dealer and a lender willing to loan you the money, but at what cost? So there's two primary factors contributed to growing delinquency rates. First is lingering high vehicle prices, and the second is high interest rates. Vehicle prices have dropped slightly since this time last year, it says. Used prices are down 4% and new just over 1%, according to Kelley Blue Book. It says these prices are still dramatically above pre-pandemic levels. And it says subprime borrowers held an average rate of 11.72% for new cars and almost 19% for used, according to Experian's second quarter data. By comparison, the average for all borrowers was 6.63% in the same quarter. So, guys, if you think your credit score doesn't matter, you are severely you're just flat out wrong. It makes a huge difference. Think about that. Subprime borrowers for used cars, 19%. That's almost as high as a credit card. It says, what happens to the over 6% of subprime borrowers who were 60 days past due on their loans in September. It says most drivers who become delinquent see a dip in their credit score, and some may have their vehicles repossessed. Look, at those who have a 500 FICO don't care if it goes to 490, or if you have a 600 FICO, if it goes to 570. Problem is, they're already in bad shape. They probably don't care. They should care, but they probably don't. So the end result for those folks is the car gets put onto a tow truck, shows up at your house one morning, hooks up your car, and tows it out of your garage or your driveway. It says your loan agreement lays out when you are considered in default on your loan. It might happen after you miss a single payment or 120 days after your last payment. Most states allow lenders to repossess a vehicle as soon as you're in default, but many lenders are reluctant to start the process if there's a chance you'll resume payments. And they might try to work with you, but those people that don't have the financial wherewithal to catch up their back payments and to continue making their future payments they don't have any basis to strike a resolution with the lender on their car. So look, that is a precursor of bad things to come. It's very similar to subprime borrowers in the mortgage industry in 2005 and 6. This is starting over again, and we're going to see it accelerate in vehicles. We're going to see it accelerate in student loans. We're going to see it accelerate with mortgage debt. So, guys, again, 2024, we are going to continue collapsing. Let's shift gears a little bit. I'll try to address in about 3 minutes the cryptos. They've been going up the last couple of weeks, just like gold and silver have. I'm a big proponent of gold and silver, precious metals, holding the physical metals. But let's talk about crypto for a second. I own some crypto. I'm not anti-crypto by any means. You know, I am for whatever can make you a nice return at that given time. Let me tell you a story about crypto. Back many, many years ago when Bitcoin was at about $7,500, a client of mine paid me in Bitcoin for a very small service, and the fee was like $750. And I opened up an account, went through all the song and dance to be able to receive the payment, got it for $750 in payment for service, and I forgot about it. And crypto then went on a tear, went up to, I don't know, I think it was mid 60s, high $60,000 mark. And my Bitcoin basically 10x'd, and that fee of $750 became $7,500. And then I traded some of that out to pick up some of the Dogecoin. That turned out in hindsight to be a mistake. Still sitting on that dog, but it is what it is. Moved in some Ethereum and XRP, and I've been adding to XRP in the last year or so. But look, I mean, everyone has to have their own investment approach, but you can make money on these. But look at the folks that bought Bitcoin I got my Bitcoin when it was $7,500. A lot of people got it when it was much cheaper than that and rode the wave up. But those that didn't sell and got greedy, it came back down, as you know, into the low 20s. Maybe it was like $16,000, $17,000. Don't hold me to that, but I think it was sub $20,000. Those that bought the hype and started buying Bitcoin when it was $65,000, took lines of credit out, took loans against their house to buy Bitcoin and cryptocurrencies, got destroyed. And they got destroyed. And to those people, who knows what's happening with that debt today, because they definitely don't have that in their crypto portfolio. Many probably sold the crypto at a major loss to cover whatever debt they could cover. This is going to happen, I fear, again, also in the metals markets. Gold's at an all-time high as of last week. Be careful, again, not financial advice, be careful chasing prices up. Let's see what happens when the futures market, well, they're open now, I didn't check them, let's see what happens. I wouldn't be surprised if gold and silver get a pullback here. I could be totally wrong. It could keep marching higher. But look, everybody always wants to buy when it's going up. They never buy when it's going down or when it's trading sideways, which is the time that you should be accumulating any kind of an asset class, especially gold, silver, and even crypto for that matter. So that is where I stand. I'm not anti-crypto, but I more so believe, for my personal investment strategy, I believe in physical metals. However, The goal is to let those metals rise in value and let real estate continue to fall in value, and then make some trades and get invested more heavily in real estate, income producing real estate. Everyone's got to have their own approach. For those of you that are just struggling to put food on the table, we hear you. Look, I went through a tough patch in 2008 and 9 with some real estate that got me in a really tough situation. So I'm not coming from a high horse position. I'm not sitting up here holier than thou. We all are facing this struggle. We're all paying higher prices, and we all have to really do our best to not only pay down debt, but not get into new debt right now, because 2024, 2025 is going to be extremely challenging times for all of us, in my opinion, and there are no guarantees. With that being said, I will leave it there. I got my workout in this morning, full body, 60 minutes. I burned some calories, felt good. I hope all of you took your time today to do that and made 15 minutes or half an hour of time in your day to get your steps in, do some weight training, get that water intake, stay hydrated. Let's stay strong, and we're gonna march through this collapse together. Again, I appreciate the support for the channel, and I will talk to all of you tomorrow. Have a great night. Bye.